Chandan and I are going to lead this session, primarily Chandan. I'm just here to help. And the focus is actually evaluating whether Nvidia is a good stock to buy at this price under these circumstances. Little bit about Xillion. I'll make it quick. At Xillion, we believe finance has multiple layers. Starts with earning, and then saving, investing, spending, borrowing, planning how to do it all, and last, protecting your wealth. We at Xillion help you take care of each one of these over time, so that whatever stage of life you are on, whatever your immediate need is, we'll help you with that. We have tools for that, and we have people for that. Some of our tools, for instance, if you want to improve your 401k, we have a product for that. If you want to track your vacation budget, whether you're on track or not, we have tools for that. If you want to buy a home and you're on the edge, whether it's a good time or not, we have tools for you to figure it out precisely. And also how much you should save for emergencies given the layoffs and the economy and the upcoming recession and all that. We have a tool for that. Which stocks you should invest in, Nvidia or not? We have tools for that. Should you invest in real estate? We have tools for that. So a lot of tools, not just that, we also give you money score, which is, think of it as the more mature sibling of credit score. If you know your money score, you can actually figure out how quickly you can actually achieve financial independence. So check it out. Also, we have a few other tools. If you have multiple loans, debts, we help you navigate those and say, hey, this one should be paid first and then the next one. The best of all, we have human mentors, people like myself, like Chandan. If you have a question about something that overwhelms you, whether it's which stock to buy or should you buy real estate, we have people who can actually help you and walk you through the decision. Check us out, and our goal is you should be able to do all your things in finance and take care of your financial take control of your financial life by investing less than 10 minutes in a week. Okay, with that, let me introduce you all to Chandan. Chandan Malu and I, we have known each other for a few months, and I'm a big fan of his knowledge and, more importantly, his passion for finance. Chandan and I, we share something very unique, which is we are both engineers, but then we kind of fell in love with the world of finance, right? I actually went to business school, and Chandan is like, no, that's for losers. I'm not even going to business school. He actually learned it all himself. So let me hand it to you, Chandan, so you can say a few things about yourself and tell the audience who you are and what are you up to.
First of all, thank you so much, Gaganji, for giving me a chance to reach out to your audience. Appreciate the time. I would say I'm a pretty humble beginner. Been in the US for 10 years, worked at Amazon and Twitter for a pretty good time. Just like you, I was just curious about stocks, but never invested in it. I was back in India, had some investments, never looked at it. And with time, I just realized that, and 2020 came in, and I thought I had seen 2008. I knew that this is a good time to put in money. And so I put money to work, and it worked out really good for me. And that's why I thought the biggest problem that I was facing was what stock to buy and what price to buy in. Those were some of the questions always were lingering on me, and started getting into this world. I built something called scdiy.com based on my learnings in the stock market. It's a very simple attempt to understand what drives stock prices, what to do, how to evaluate businesses, and I guess Warren Buffett. I've been an avid fan of Warren Buffett and Charlie Munger, and they have been a big source of inspiration for me in this journey.
Yeah, so I'm just showing a real quick, what Chandan has built. He's a one-man Swiss Army knife, so he has done it all by himself. Great, thank you, Chandan, for the quick summary. So once again, if you have questions, feel free to ask in the chat or unmute yourself and ask. So let's jump in, shall we? Nvidia. Chandan, did you want to say anything else?
No, we're good.
Before we end. Okay, great. So this is Nvidia, and I don't know how many of you knew, but Nvidia went public in 1999. If you had bought $1 worth of stock, you would have $1,120 today. Like, this is truly, I think it's the best wealth creator over this time period. I don't think anything beats it. And the company started in 93. Chandan, do you have to add anything to this?
No, I think as Gagan has just shared, right? I think stock investments are one of the best investments, and the key idea is to find a wonderful growing company and give that time, give that edge. And I'm pretty sure, as Gagan is going to display later, why time is so important in this journey.
Yep. So I want everyone, like, think about it this way. Nvidia has become a darling over the last 5-6 years, but especially over the last 1 year, right? Because look at this hype. When the market is crashing, Nvidia is climbing big time. So let's actually split it into multiple pieces. Let's just take a look at the last 10 years. Even in the last 10 years, Nvidia has gone from basically like $3 to $500 at the peak, right? But let's split this journey into multiple parts. If you had bought the stock 10 years ago, 2013, and held it until 2018, you would have made 17x returns. Okay, great, right? But 2018, what was happening around this time? Anyone, any guesses? Why was this thing big? Other than gaming, they've always been great at gaming. And we'll talk about these things a little more. Any guesses on what was happening, what caused a lot of this price ramp up? Hint, it might have to do something with, yes, absolutely right. Bitcoin mining, crypto in general, right? So this hype cycle was crypto, and Nvidia, almost by accident, found itself in that hype cycle. Its chips were really well positioned to do mining. Even though the chips were designed for graphics, they actually worked out for mining. And I think it didn't become public knowledge, but around this time also, its chips were getting started to be used in AI as well. But the story is not straightforward. Then crypto crashed. There was a minor crash. I don't know if you all remember, there were initial coin offerings in 2017, 18, and then SEC said this is all, like propaganda, and this is all just wasteful, and everything kind of stalled. You see 50% drop in the value of Nvidia. What happened after that? If you actually lived through that, 3 months of crash and held for another 5 years, this was another 8x gain, right? Until 2021. But this is when the whole market had gained. It was not just Nvidia. This was the COVID boom. Great. And then came the post-COVID bust, 60% decline. So Nvidia is back to like 2019, early 2020 prices. And then something else happened. Any guesses what this is? I think we all kind of know. AI, right? AI, exactly. This is AI. So Nvidia has gone from one boom. This was, like pre-2013, it was all gaming boom. And it grew steadily. Then the crypto, then the AI. So 2 lessons here. One, what Chandan said, compounding takes a long time. If you had sold this stock at any point before 2023, you would have lost money, relatively speaking, from opportunity cost standpoint. So finding a great company and holding for a long time is key to building wealth through stocks. Okay, and we'll talk more about this. And the last part of the cycle, we are actually in the decline cycle. If you see, Nvidia has gone up and down, up and down. So now we are kind of in the down cycle. I think a lot of the hype of AI is priced in. Any questions so far? Feel free to ask. Don't hesitate. So, Chandan, do you want to add anything to this so far? Great. Chandan, do you want to talk about this one, the price to sales, and how to look at how the stock is valued?
Definitely. So I think typically the way market valuations work is there are a lot of there are multiple ways a stock price is valued. In this case, we are trying to show you like price to sales, which is a metric a lot of people use in the industry. And as you can see, initially from the period from 2020 to almost 2016.
Sorry, 1 second, Chandan. Let me explain for those of you who are brand new to investing. Price to sales is what is the total price of the company, right? Stock market value. And in Nvidia's case, it's 1 point something trillion dollars. And what are its total sales? Let's say it's 20, so it's like $50 billion. So for every $1 of sale revenue, the market is saying we will give you $20 to buy this stock. And if you want to compare, the S&P average is about $12 to $15. Above 15, something is considered expensive. Below 15, it's considered cheap. So that's something to keep in mind. And you can see Nvidia has jumped in every hype cycle, but it's at about what, 31, 32, somewhere around that right now. Please go ahead, Chandan.
Yeah, I think thanks for that price to sales introduction. Yeah, I think the key thing to understand is like price of a stock has multiple influences, and in this case, what we are trying to show you, what's being shown here is like from 2020 to from 2010 to 2016, price to sales ratio of Nvidia was 10. Essentially, for every dollar that Nvidia was earning in revenues, market was ready to give $10 premium on top of that, right? And as you see now, with all the hype and boom, right now markets saying we're gonna bid $30 for that particular for that revenue, and it's all in the future that market is expecting that Nvidia's revenue is gonna catch up, and hopefully with time is gonna go towards the average, which is like 10 to 15, which is what market values it at.
Yeah, and a great question by Animesh. It's like, can compounding actually work in stocks? In particular, those that are riding waves and hypes. We will address this in detail later, but I would say the short answer is yes. And I would add one more thing: if the leadership is competent to ride those waves. Okay, so I would say a great company will be able to ride a wave if its leadership is strong enough, competent enough to identify that wave, jump on it, and ride as the wave is rising. IBM in his example, where IBM forgot how to ride the waves back in like early 2000s. It lost, right? Amazon, Tesla, Google, Microsoft, above all, and Nvidia, they are the examples of companies where competent leadership identifies a wave, puts more money into what's needed to ride that wave, ride that hype cycle. And sometimes hype cycles become business cycles. Sometimes hype cycles just fizzle. But like AI, there is some hype, but some business and good companies are investing in that, and they will ride.
Yeah, exactly. I think we learned that Nvidia actually is a wonderful business. There's no doubt about it. And it has a charismatic CEO.
Yeah. Great. Any other questions on this? How to look at price to sales? So if you ask me, Nvidia is very highly priced right now. I haven't put, again, 10 years ago, I wish I had put money, but I didn't know crypto was going to happen and all that, right? But I should have trusted Jensen's, the CEO's competence. But I just didn't know enough about the industry. The main point is right now, Nvidia is very, very highly priced. Very highly. Like 30x, 31x is twice as expensive as S&P 500 average. So you can imagine, is it sustainable? It's for me, it's hard to justify. Chandan, what are your honest thoughts? Would you buy Nvidia at this price, at this high price to sales ratio?
Yeah, I think there's a law of large numbers. As you keep growing, and after some time you're gonna reach the economy and reach the GDP size of the economy size. And once you reach the GDP size, you cannot grow more than 2 to 3%. And so
Yes.
that's where the roadblock comes in, and we need to be very pragmatic as investors to figure out whether we are getting what we are expecting in terms of future returns.
So I think Chandan made a great point. If you look at Google and Apple and Facebook, they are like mega companies, mega successful. But guess what their growth percentage is right now? Apple actually declined in revenue. Like this quarter, Apple's revenue year over year declined. And Google is barely growing, and Facebook also declined in the last couple of quarters. They barely started growing again. Once you hit large enough numbers, you saturate the market. Like if AI market is, let's just say, $100 billion a year, once, and Nvidia is already making 50 to 60 billion a year, once they reach 100 billion, then it's not growth, then it's profits. The growth is going to stop. Any questions on this? Okay.
I just want to add, Nvidia has a pretty big growth runway right now. It's still there's a pretty high chance it's gonna keep going, but it all depends on at what price you buy it. That's where the investment comes in.
Yeah. So Nitin asked, hello, welcome Nitin. So Nitin asked, what about price to earning? We are just getting there, actually. So Chandan, over to you. And there is another question about how to identify a company. We will tackle that right after the slide. So Chandan, what about earnings?
Yeah, so I think there's a strong correlation between earnings and stock prices. So typically, it may not show in the short term, but as earnings grow, stock prices relatively reflect the same level of earnings. And I guess we have one more slide, maybe after this or not, I don't recall, but you'll see a very similar trend. So you'll see Nvidia's earnings grow at the same rapid rate, like in terms of CAGR, cumulative run rate, and you'll see the stock price also showing the same thing.
Yeah.
But the only case is in Nvidia's case, it's the stock price is astronomically CAGR versus the earnings, as Gaganji will show you in the next slides.
Yeah, and Nitin, what we will do is after this, we will also put the PE chart as well. By the way, for those of you who might be unaware, price to earnings is, as I said, price to sales is total market value divided by total annual sales of the company. Price to earnings is total market value divided by total
net profits.
Net profit by the company, right?
Yeah.
And generally, I'm not even going to go there because as Chandan said, because Nvidia is in hype cycle, that ratio is way off the charts. Like their price to sales is 30, right? A good PE, actually, when I said 50, a good price to sales is under 10, is considered healthy for a growth company. Price to earning is actually 15 or 16. S&P average is right. It's around that, Chandan. 15, 16. When it gets
Less
above
than
18, 20. Less than 20. If it gets above 18, 19, people start saying, hey, the S&P is overheated. So Nvidia is way over that. I would say, I think they're probably in the
100 P right now. Yeah.
100. So there is too much expectation from Nvidia. So Wall Street expects, so this year I think they are going to grow more than 100%. Wall Street, by this measure, Wall Street expects the Nvidia to grow at 100% for multiple years to justify the valuation right now. Anything else to add, Chandan? Great. And so let's so one more question is,
we're gonna go back to the operating margin slide. Just want to show like why Nvidia is such a wonderful business. So as you can, as everyone, so operating margin essentially is the profit margins for every sale that they make, how much profits they are making, like real profits, right, before taxes. So in this case, as you can see in the graph, Nvidia started with like a mid-teen profit margins from 2010 to 2014, but now its margins have a balloon to like more than 20%, which is like around like on an average like 22, 26%, which shows pricing power. And that's a very big sign for a wonderful business.
Yeah, but I do want to say this. They have recently increased their prices because there is so much demand. And the demand is all because more companies, I don't know if any of you follow startup news, but these days startups are raising, like, there was a company, I forgot what the name is, they raised $4 billion from Amazon, right? That $4 billion is where half of that is going to go to Nvidia. Anthropic, right? Anthropic raised. So a lot of that money is baked in, and it's actually Nvidia is able to raise prices, and people are still buying. But we know when prices are raised, what happens after that? Prices crash after that, right? So it's inevitably going to come down. What is ideal profit margin? So that's a very specific question. I think the more important thing is, what is sustainable profit margin, right? Right now, Nvidia can charge whatever they want, but sustainable long term, in general, I'll tell you this. I've been in software. In software, gross margin is more than 90% because it costs you nothing to sell your, to make your product and give it to the next customer, sell it to the next customer. Operating profits, what I have seen is any company that is able to keep the operating margin above 20%, 30% is considered good.
Especially at such big levels. They have like almost like $50+ billion of revenue, and it's pretty hard. I think it depends on the industry also. Retail has lower profit margins, while software has higher profit margins, so it depends on the industry.
Yes, and hardware is in between, right? I mean, Google's profit net margin is way higher than Nvidia's because Google doesn't build stuff. It ships software, and software just scales to billions of people. Just to give you an idea, the lowest end usually is retail, as Chandan said. Walmart's net profit is usually in the 3 to 4% range. If they make 5%, it is considered a smashing success. Amazon, retail business, I don't think they ever made money. I don't think they will ever make money. That's not their style. But even if they make money, it will never be more than 2-3%. Because retail doesn't make money at that scale. It's a highly competitive market. But Amazon's cloud business routinely makes 20, 30, 40% margin. So it depends on the type of business, the type of industry. Airlines, until the recent boom, airline margin was like, if you hit, you could probably never hit double digits. It was always single digits.
I think the key thing to check out there are two things. A, are those margins sustainable and growing for a business for a good time? That's the key thing, like, because competition will kick in sometime. So is the business still able to maintain those margins or grow it, right? That's one. And second, like, what is the return on business investment? Because that's a more critical metric than margin, because at the end of the day, that's what's going to tell you, is the business expanding, is it growing, is it investing in some future? That will drive the future business returns.
And one of the things to keep in mind when, as Chandan said, sustainable, like you will see a lot of companies. One company I always like to point is SentinelOne. It's a security company. And people are like, oh, they are growing wonderfully. They make $100 in revenue, but they spend $150 in advertising. Like, you can grow at 100% that way, but that's unsustainable. But Nvidia, yes, their sales expenses have grown. You can see their operating margin actually declined in 21, 22. But then it again, when the prices came up and demand came up, it increased. So sustainable is the key. Like a good example to see is like Microsoft is a sustainable profit margin business. You look at them for last 10, 15 years, they've gone through so many cycles. Their profit margins they barely budge. Okay, there was one more question. 10 years ago, how could have one anticipated Nvidia to be a great company? This is a great question. I think it's Hall of Fame level question. But I'm gonna try to answer it to best of my abilities. Okay, and I'll give you my own example as well. I think you will know it when you see it. And when you see it and you know it, you should believe yourself and go in. My own example, Facebook IPO'd in 2012. Okay. And I was in business school around that time, or just after IPO'd. Facebook IPO'd late 2012. I bought a lot of stock of Facebook, like almost like 30-40% of my liquid net worth in Facebook. And then I started business school, and every one of my friends said I was an idiot, and because they were people from finance background. The thing is, when I bought Facebook, I didn't know too much about finance. I didn't know about price to, like earnings. I didn't know price to sales. What I knew was Facebook was a great product. I don't know how many of you remember Facebook from 2010, 11, 12. It was a beautiful product. We had our kids, we posted pictures, and everybody commented on it. And what I knew was that because people love this product so much, and also I met some people at Facebook. I had a job offer, which I declined. Huge career mistake. That's for another time. But, I knew people. I interacted with them. I knew the kind of people they were hiring. We were collaborating with them for certain projects. I was working at Akamai, which was a vendor for Facebook, for their traffic, network traffic. I saw their traffic numbers grow. Every month, their traffic was growing like 30-40%. I could see that. I had access to that. So based on all that, I made a bet on Facebook, and I bought a lot of stock by my own, like humble standards at that time. And I rode that wave, and I sold that stock for 7, 8x, 5 years, 6 years later. After the election, there was a lot of stuff, so I sold it. I bought Tesla in 2013, and everybody said I was an idiot. Tesla hadn't even started making Model S at that time. But my point of buying Tesla was, whenever I talked to anyone who had not just driven, not many people had driven Tesla, but those who had just seen Tesla, they would salivate. They would be like, oh my God, what a car. Like, people would go to a shop. We were in Boston at the time. People would actually drive to a shopping mall, which had all the luxury brands like Gucci and Coach and Chanel and all that. But right in the middle of those brands was Tesla, and people would salivate at that. And I'm like, whoa, if people love a car so much, there must be something. And the other thing I saw was, there's this company, I forgot the name. They actually, Consumer Reports. They test all products, physical products. And they had tested all the products in the past. They said Lexus was the best car, 5 out of 5 stars. It's like the best car ever made. Then they tested Model S. They said Model S blows everything out of the water, including Lexus. Okay. So when I put those things together, and I knew that Tesla was making software first. So I invested in Tesla. I still own Tesla, most of it, like 70% of what I bought. This is now what I encourage, and this is what at Xillion we help you, is find your alpha. Find what you are good at and what you know better than 99% of the people. If someone really followed Nvidia back in early gaming days, and they knew that if you put Nvidia chip, your game performance was way better on a PC as compared to any other chip, right? And if you were tuned into the hacker community, you could have probably seen the earliest sign of their chip being used in more places, because the chip was so much better than other chips. So find what you know the best. Dig deeper into that. You will be able to find things. You would be able to find conviction in that. And if you're not, come talk to us. We'll help you find that conviction. Don't worry about the finance numbers in the beginning. If you know a product better than everyone else, and if you know that the customers of that product love that product, chances are that company is going to become successful over the long run. Does it make sense? I went on a pretty long rant on that. Does it make sense? Great. Thank you. Thank you. All right. Next one. This is back to Nvidia, headwinds and tailwinds. This particular thing, I want everyone to pay attention to this. Data center. What is data center? Everybody knows AWS, everybody knows Google Cloud. And if you see, Nvidia was a gaming company primarily until about 2015, 16. Then it, some of this, crypto thing came in, and it became a data center company. then crypto kind of stalled, then it became an AI company, and look at this. So their revenue for data center has gone from less than $1 billion to 15 billion. 15 billion in the first half of this year. So this is almost 60x jump in a segment of revenue that was barely there less than 10 years ago. This is the only reason Nvidia is a $1 trillion company, because people who used to buy Intel chips, AMD chips, and other chips, they actually have no other option but to buy Nvidia chips and put in data centers, whether it's AWS or Google, or some mom and pop little data center, those are popping up. They have to buy those chips for AI servers, and that's causing all this. Chandra, do you have to add something to that? You're on mute.
This is a wonderful slide. It shows how Nvidia has been able to tap into multiple areas, and the data center revenue is just exponential. It's just wonderful growth.
And I think the Hall of Fame question asked was, how do you actually identify? I'm going to go a little bit deeper on that, and I would say it's not that you can identify the company. I think you should identify the people. Companies don't innovate, people innovate. And in this case, it's founder and his team. They are the alpha. Like, it's not that all of a sudden Nvidia did, Nvidia as a company. It's the people who made the company. They realized certain things, and they actually took action sooner than, like, Intel probably had to do 30 meetings to approve a design. Jensen and his team probably did 1 or 2 meetings and approved a design. Now you keep doing that for 10 years, 20 years, 30 years, you see this, right? Amazon, famously, like, how many business lines has Amazon started? It boggles my mind. Apple, for that matter, right? So if you bet on a certain team of people, they're likely to give results over the long run. Okay. And this, does it make sense? So rather than identify a product which is loved by customers, then follow the team that built that. And if you love the product, customers love the product, and you like the way team is executing, buy those stocks. In the long run, it will work out. It will work out handsomely. Tailwinds for Amazon. Sundar Pichai gave a talk when OpenAI came out, and everybody was, Google is dead. And Sundar gave a talk. Sundar Pichai gave a talk, and he said AI about like 50,000 times in that, because AI is that important right now, and this is exactly what's driving Nvidia. The thing is, this is where the founder and the team comes in. Every 4 to 5 years, maybe every 7 years max, there is a hype cycle, which is also a business cycle, right? Business cycles shift. Every few years, there's a new technology, and businesses adopt that, consumers adopt that. It was the internet, then it was the broadband, then it was the mobile, then things keep improving. Every 4 to 5, maybe 7 years, there is a hype cycle, there is a new business cycle. Great companies will always get into that, place themselves into that, and ride that. Find those. Shorter design cycles for Nvidia specifically. Again, I don't know if you know, but Jensen Huang, he has like 35 direct reports, right? How many people do you know who have that many? Max, I have managed this 30 people, and that was a lot of work, but he has 35. So they're able to make decisions much, much faster. Some of the headwinds, and feel free to ask questions, please. Some of the headwinds, cloud providers are designing their own chips. Google started their Tensor chips a long time ago. I don't think they've made as much progress, but Amazon is designing its own. Tesla is designing its own. Intel and AMD are a few years behind. Intel brought one of the old time tech employees back. He was CEO of VMware, and he left VMware to join Intel. I'm actually a little bit bullish on Intel because of that. So we'll see how it goes. But Intel and AMD, as they say in American football, they say football is a game of inches. business is also a game of inches, maybe game of quarters and years. And Intel and AMD, they'll probably nibble at Nvidia's profit margins and revenues soon. Chandra, do you want to talk about the regulatory and the Apple, Tesla, and those ARM?
Yeah, I think for Nvidia, I think the biggest challenge is the consumers who are consuming those Nvidia chips are also entering into the industry, and so they want to build their own chips. They're working with other partners, right? And there's a big China headwind, essentially, given the AI concerns. So just have to one just has to be mindful about that. That also shows how important Nvidia is to the ecosystem.
I think we kind of touched upon all of these.
Yeah, I just want to add one more thing.
Yeah, please.
I think Gaganji was trying to say two key things. One, customer loving products and you seeing it in action, right? Those are the two biggest sources of moat, and the conviction. The conviction matters. Like if you believe in the company, but if your conviction dies after 6 months, 1 year, you won't see that growth. You have to have the conviction for like next 10 years, 7 years to see that fundamental paradigm shift. Businesses don't blossom in 1 year, 2 years, 3 years. They take time there. And so it's very important to have that conviction. And I call it um, feeling the pain, like able to suffer. If you can suffer that pain, if you can have that patience, Charlie Munger says, sit on your ass investing. If you can have that, that's gonna reap wonders.
Yep. And just to paraphrase that, it's find great companies, hold on to them for a long, long time. Okay. I think a question, a theme in when people signed up for this masterclass was, who's the next Nvidia, right? This might break your heart, but there may not be a next Nvidia for chips. The reason being, just like there wasn't a next Tesla, there wasn't a next Google. I think every few years, I would say every 5 to 10 years, a company comes along that becomes a generational company, right? Google did it for search, Facebook did it for social, Apple did it in multiple segments. But every few years, there's a company that does that. Nvidia is for specialized chips, right? Again, they are not great at automotive chips or other chips like commodity chips. They're very good at very specialized chips. So if you're looking for this industry, there isn't an Nvidia that you should invest in. AMD can catch up, Intel can catch up. There are a few others, but the ARM, ARM is public now, but they are very segmented into mobile. Qualcomm, again, very mobile specific. Nvidia is Nvidia. And if you missed it, that's okay, right? I never invested in Nvidia. It's fine, because why didn't I invest in Nvidia? Because I did not know semiconductor. I just don't know. I'm a mechanical engineer. Then I became a software engineer. What do I know about really hardcore? And I'm not a gamer. I think that's the other thing. I'm not a gamer. My son is a gamer, and he had very specific, I want to have this Nvidia, graphics chip and all that. But I had no idea. So I missed the entire boat. I'm not a gamer. I'm not a Bitcoiner, all those things. Although I was in data, so I should have caught AI bug earlier, but I missed it. And that's okay. The idea is you cannot have many winners in your portfolio. You need to find 1, 2, maybe 3. If Warren Buffett says in his 60 years of investing, he has found only 12 companies that have given him most of his returns. So if you're Warren Buffett and all you do every day is read the company's reports and all that, you find one company every 5 years. You and I are not Warren Buffett, but we can probably hope to find one every 5 to 10 years. Find one. You'll be able to find it. And we will help you. Our goal at Xillion is to help you find your own niche company that can become great. Also, a big thing going for Nvidia is their founder is still there. Just yesterday, Chandan and I were talking about it, that yesterday Jensen Huang, he came on a podcast, a clip of podcast was revealed. He said, the interviewer asked him, if you were to do the same thing again, you were 30 today, what would you do? He said, I would not start a company. And he said, because it's so difficult. It's a million times more difficult than you imagine. And I, as a founder, know that firsthand. It's a million times more difficult. But the fact is, he's still there, even though it's so difficult. That's what makes Nvidia great. He's not looking for a golden parachute. He's not looking to go retire, in Hawaii. And no, every day he goes in, he deals with, pardon my French, really, really stupid stuff. And he still comes out, and does it day after day. That makes companies great. Tesla is an example. Facebook still is an example. I'm not a fan of the company, but Mark Zuckerberg still there, still executing. That's an example. So Nvidia still has that edge. I think Intel and AMD, they'll get there, but they'll get there, let's say, in 3 to 5 years. By the time, most of the profit would have been taken by Nvidia. Right? The industry would have saturated by then. Nitin asked a question. The addressable market would have been, like, AI is not going to take over everything, despite what everybody's saying. AI has a market, addressable market. Let's say it's $200 billion. Nvidia is going to take, let's say, 50% of that market. Everybody else will take the rest. And it'll be like Apple versus Samsung versus LG versus all, right? So a few big winners, 1 or 2 big winners, and everybody else will take a little. Any questions? This more or less concludes what we were trying to share. Open to all questions. If you are looking for your specific, niche based on your experience, where you live, what you use, at Xillion, we can help you find the companies that we believe are early in their journey, and you can ride them for future. No guarantees that will help you find the next Nvidia, but we will help you find some decent stocks that, again, if you hold for 5 years, 10 years, they're likely to give you good returns. Any questions? Absolutely. So are your suggestions going to be tech specific? Okay. One thing I promise you, I will not recommend you any utility stocks, and I will not recommend you any retail stocks. But so here's the reason. There are some sectors that do better than others, right? So yes, we will do emerging sectors, right? Emerging growing sectors. If you want to buy utilities and enjoy 4% returns per year in dividends, great. But we are not going to recommend, that's what is the chance that this PG&E, the most hated company in California, can it become a 10x company? No, it can never become a 10x company. It's barely going to survive, right? Your local utility company is not going to, your local retailer, whether it's a grocery store, Walmart, they're just going to keep chugging away, but not going to become. Growth is actually in sectors that are tech, biotech, pharma, especially in a lot of the genetic medicine companies. A lot of growth in there. Any other questions? One more thing to keep in mind is, if you are, so before I overwhelm you with that, if everybody wants to take a big growing company and, get 1000x returns. But if you are not that, it's not the end of the world, right? I mean, my 401k until last year was all in 50% S&P 500 and 50% growth index, right? And I did well. So if you don't want to deal with which stock to pick, which not, just invest in S&P 500. Over long-term, S&P 500 gives you 10% returns. Or you can invest in an index sector. Like there is, I think I can share this in an email if you have signed up. But there are like tech sector, even NASDAQ, right, 100 and other Fidelity and Vanguard tech sector. They have given 15, 20% over the last 10 years. Whether Nvidia goes up or Tesla goes up, if you don't want to miss out on those, just buy index funds. And we have all of those index funds on Xillion as well. So you don't have to fret about something. Like I didn't buy Tesla, but I bought S&P 500. So I got some gains from Tesla anyways. So that's one way of looking at it. And this is high level. If you buy, let's say, real estate, 4% returns per year. That is the long-term average. If you buy bonds, corporate bonds, about 5% per year. S&P 500, about 10%. Growth stocks, about 15%. Index. Venture capital, about 20%. If you have more than $1 million, you should start investing in venture capital. And if you need some ideas, happy to help you there on Xillion. And we have a nifty tool. If you sign up, you can see, if you say, hey, this is my money, how likely is it to grow? We have a pretty good projection in Xillion. So you can see how the money will likely grow. Okay, you can start your Xillion 1-month free trial today at xillionapp.com. If you have questions for Chandan or me. Okay, passive income from real estate. In general, passive income is very expensive. Okay, this is something I've come to conclusion in the last 1 to 2 years. Passive income is extremely expensive. You can buy real estate and it will generate returns, but let's say to buy a $500,000 home, it will give you, in the US, the ratio is about 15 or 20, right? So it will give you 20th of that. So about $25,000, maybe $30,000 in annual, cash back, which is revenue, not even profit. Then you pay your mortgage, then you do other things, and it comes down to much lower. Passive income is very, very, very hard. The best passive income, if you are young, and when I say young, if you are under 40, invest in stock market today. In 15 years, you can actually start selling those assets, and that will be your best passive income because the growth will take care of everything. But real estate, tax strategy is a key. Yes, so let me finish this thought. The real estate, we have wonderful tools within Xillion. You can go and check out. We help you actually figure out, and I can show you maybe right here, Xillion real estate investment tool, and you can actually figure it out whether some real estate makes sense or not. And we actually give you very, very good tools, and also show you the tax treatment, how much rent is going to come in, the tax benefit, the monthly mortgage payments, all of that, and we compare that with S&P 500, and we tell you whether it makes sense or not, right? So that's the real estate. But real estate is good only if you do it by borrowing a lot of money. And at today's interest rates, that's prohibitive. It was great until about a year ago, but with the rates where they are, it's very hard. Capital gains. There is question about tax strategies. Chandan, do you have any comment on this, tax strategies?
I think maybe I'm not, if it's in reference to stock markets, then yes, I mean, like while selling, you have to pay taxes depending upon long-term and short-term. So and in any class of investing, you have to be mindful about that. So I think that's a very important thing to pay attention to.
Yeah, but here's the other thing though. I am much more of I have been a top line investor rather than a bottom line. So, and if you look at the top line growth, taxes actually do not matter as much. I'm just going to give you an example. Do you know Wealthfront? Has anyone heard of Wealthfront? So they claim that they actually give you tax benefit through investing. Okay, they call it tax loss harvesting and those things, right? Their performance over their entire life since 2012 is 7%, which is way less than S&P 500. S&P in the same time has given about 12-13%. I think if once you start optimizing for taxes, you give up on gains, which may not be the best thing.
I think buying and selling every year is not, first of all, it's stress to the mind. You have to find the next alternative investment.
Yeah.
And second is taxes. Uncle Sam's gonna eat your profits, but keeping it over the long term, your tax dollar is gonna earn money on that. So that's gonna be a significant leverage for you.
Yeah.
And that's the benefit you see with investing in SPY, because if you keep on invest in SPY for the next 10 years, you see that massive 10% compounded growth.
Yeah. Yep. Great. Find great American companies to invest in and hold for long term. It has worked for me. It has worked for so many people. I cannot even tell you. Stock market is a great way to build wealth for the long term. And if your income is high, invest in real estate. Once the interest rates come down a little bit, we have a wonderful calculator. This tool will really help you. Go in and put in your, like I also did it more recently. I did some of the ones that I'm like, okay, if the interest rate is at, I think this one was 7%, right? At 7%, things start to not make as much sense. But if you can, and buy real estate, because you get this thing, which is tax advantage, right? Tax advantage is great, and you get for instance, you also get the tax benefit and property appreciation. So the bank pays 80%, but you get 100% of the appreciation. That's what makes it real estate worth it. But don't think it's passive income. Real estate is not passive income, because you have to invest a lot of time. I have a couple of properties. It's not free. It's not passive. There is always, like, I have to go and clean up something clogged every few months. It's not passive. Great. Any last questions before we close? Thank you so much, everyone, for attending. Chandan, thank you so much. If you have any more questions, feel free to reach out to us. I'm at gagan@xillion.co. I'll also share this video will also go online. Feel free to ask questions post this session as well. You can reach out to me. My email address is on our website as well. And thank you so much for attending.